Good morning, everybody. It is Friday, May 1st, first day of the month here, 2020. For our news events of the overnight session, you had, it's basically a European holiday, just so you guys know, so it'll probably be a little slower than normal, or at least we won't have European traders in. It was bank holiday, all of Europe. Okay. At 2:30, you had commodity prices for the Australian dollar. At 4:30, we had final manufacturing PMI and the M4 money supply, as well as mortgage accounts for the Great Britain pound. This morning at 9:30, manufacturing PMI out of the Canadian dollar, final manufacturing PMI out of the US markets. Anything below 50 is considered contractionary, so this will probably be a pretty important number. This manufacturing PMI and ISM manufacturing PMI. If this is a miss, this is going to be pretty bad for the market because below 50 is already bad. It's already considered contractionary, and then they're expected to come at 36.7. If it's lower than that, that's going to reflect poorly on the market. We're going to have construction spending, and then ISM manufacturing prices as well, all at 10 a.m., half an hour after the bell. We're also going to have Ward's total vehicle sales all day long. All right, that's all we have for news events. I do want to start off by looking at the S&P 500 and just comparing it to the VIX. Let's back out here to the daily chart, guys. It is very possible that this is a pretty deep, big swing high that we're putting in. It's definitely an important level. So if you look at, and let's remember, this is the fastest, most aggressive sell-off in the history of the stock market. Okay, and followed up by one of the biggest rallies the market has ever seen. The full 50% retracement technically broke here in the S&P. We did get one day where we closed above that, but really that's not surprising considering the speed at which we went down. Right now, the only support level that I know of that has been used before, and that's why I say I know of it, is because we've seen it work, is an extension from the high of the 26th of March to high. We traded it here, we traded it here, we retested here. We completed the profit targets on Wednesday. Those profit targets completed on the day of FOMC, and then yesterday we had an ECB conference as well as jobless claims, and we have sold off and are continuing to sell. Now, where is the 50% retracement below? That is all the way down at $27.99. And in yesterday's video, I talked about, if we continue with the selling pressure, there's no support till $27.99.75. That is still the case. That is still the case for me. We are at the 38% retracement here. Okay, the only known level that I have below is $27.99.75. So that basically takes us 165 points from the high, possibly in 2 days, which is, one of the bigger sell-offs we've seen since the market has turned back to the upside. Now, moving forward, if this extension doesn't hold, this market's going to get real interesting again to the downside. But as of right now, this is the support level we would anticipate below, and we'll see if that trades today. But I'm very intrigued by this support level. There's not much for news today outside of that ISM, so that could definitely trade today. It's about 40 points below where we're currently trading. We're looking at a 60-point gap down. We're looking at a 60-point gap down. And if you go back to yesterday, what's important here is the sequence we were in. Going into the morning, it was a low to low, 29.39 to low. We traded it once to target. This was the first entry level off the open. It was a 29.16 quarter. We completed those profit targets. That same anchor new low traded right into the close. We had Apple earnings, I think Amazon as well. So, big earnings have started to come out. We traded into our resistance levels and we completed profit targets into the end of the day fairly quickly out of there. Now, there is the possibility that we go straight down in extensions here. And in fact, now that we're through this low, Going into the morning, the low from 28.38 quarter to low is what's actually holding as a resistance level. That's holding as a resistance level. The more conservative retracement would be a move all the way back up into the extension from yesterday. In this, I don't really see us getting far above that. This 28.85 is going to be like the gap fill, the prior day's low. To me, this is the best entry. It's just a matter of if we get up there. It's a matter of if we get up to that 28.85. If we continue going straight down here inside of this more aggressive sequence, we just won't see that sequence play out. We have valid downside targets from an extension to extension sequence. 28.83 quarter, the anchor. The downside target is 28.18 quarter. We've already tested this 28.50 here. So if anything, first thing in the morning, there would be a test up into 28.57, little fake out above these highs, back into the 50% retracement of the extension, and then possibly a move lower. If you look at the VIX, yesterday we were in an extension sequence. Well, we've totally blown through that target. The extensions were from 32.50 to high, and going into the end of the day, we had front run that extension level. All it took was that extension to trade, and then it just rocketed. And then in the after hours, we began a traditional sequence that's completed profit targets. Right now, what I'm going to look for is the halfway back for the day in the VIX. That's the 34.82 high as a support level, and that's a 36.20. That's a 36.20. So if and when the VIX trades the 36.20s, I would anticipate there to be a corresponding resistance level in the indexes. 36.20 support halfway back from the overnight low in the VIX. Moving on to the Dow. Similar situation. The Dow, however, if you back out to the daily chart, has not broken its full 61.8. The Dow is technically held its 61.8 retracement short. And while we're at it, guys, the Russell did too. The Russell was clearly the weakest market on the way down. And the Russell was the last and final market to trade into its full 50% retracement. And it was in a total breakout. It was in a total breakout where the Russell was trading up into that full 50% retracement. Russell's super technical in the higher time frame. We had this 50% retracement to target. We had our next measured move to target, which completed, and then we traded that halfway back. This next measured move right here in the Russell is very important for the continuation of the long series in the RTY. It's very important for the long series continuation in the RTY. Now, we quite haven't got to that level. We've traded the 12. We haven't traded the 1260. It's been front run. But if we break below a 1233, that's going to break this long sequence that the Russell's been in. And why is it? Why would it break? It would break because we traded the full 50% retracement short. Okay, and this is the first time this is tested versus if you look at the Nasdaq's well through its halfway back short. The ES broke it. The Dow didn't. The Dow's been consolidating on it. And this target in the Russell's 772, which is kind of interesting because you have, the Dow, which is all the mega caps, right? And then you have the Russell, which is the small caps. Those are the two that are holding. Interesting, to say the least. So I just wanted to kind of point that out. I'm not going to map out the smaller time frame, the Russell, but here in the Dow, what we would be anticipating, and I'm going to show just the more conservative extension. We have this 50% retracement short that runs to and through profit targets. That low to low sequence once to its profit target, okay? Same anchor new low into the end of the day held. The more aggressive sequence here is 24,141 to low. This is the more aggressive sequence, and that 50% retracement is 23,920. We have a leg start there on the 30 minutes little shelf. So this is the first resistance level I would anticipate here for the Dow, and then above that, it's just the full extension. and that's could lead us all the way up into a gap fill, and that would be, for me, a very important resistance zone. Moving on to the Nasdaq. In yesterday's video, I talked about a potential support level trading in the Nasdaq, and that was at 87.43. Well, we've traded that level, and that is the full 50% retracement long from the 21st to high. Okay, that's just a halfway back, lines up with where the rally began. All little leg starts from my little leg start indicator, right? Talked about this gap potentially filling, coming down to this zone. This was all in yesterday's video. Now, opposing that, we have the same sequences we have in the other indexes, but remember, the Nasdaq's been the strongest market, but it has been weak, relatively speaking, as of lately. Now, Apple earnings are out, Amazon earnings are out. I'm not sure if Google reported the other day, but the heavyweights in the information is out. There's two extensions here to same sequence. There's the extension 2 extension, and there's the original extension. I'm going to just leave up the original extension here, which is a 90.62 half to low, because there's gonna be a little more volatility, I'm assuming, with those markets or those bigger companies reporting. I'm looking at the 88.93 area as resistance. 88.93. Okay, we do have a support level here at 87.43 that has already traded, and you can see we're getting a decent bounce. Moving on to oil. Yesterday, talked about if we could get above that 17, I think it was like a 1740, I think was the level, that there was room to 2040, 2049 specifically. Well, what's our overnight high? 2048. How's that for a decent level? So we came one tick away from the resistance level we were looking at. Now, we are going to be stuck in between what is this resistance level up here at 2048 to 2057 and the untested 50% retracement of the extension long at 1709. 1709. We have been front run here, and so this to me is just the top of the range. This extension, it never really traded. It never really traded. So I just see this as a top of the range when we need to come back down to the 1709. There's nothing I want to do here. We've already had that test of resistance. We didn't test what I would consider to be the next anticipated support. So it's a matter of us actually getting back up and rolling over, or us coming back down to the bottom. So I'm just looking at basically 1709 or 2048. USD JPY getting a little sloppy. Now, we had our full 50% retracement for the year really catch a bid yesterday. Really caught a bid. And it caught a bid, right at 1030. It just went straight up. After that move, there was a pullback to enter. We completed those profit targets. Next measured move, traded, then failed. Traded, then failed. And then we came back up to the old target and just began selling off back to the bottom of the range. So what we have here is a range in the USD JPY from the 106.40s to the 107.20s. Right at 10.55, we sold off, and we spent, really the remainder of the day up until about 3 o'clock below that level. We spent about till 3 o'clock below that level. And now we're just sideways. So I'm really just, there is smaller sequences in here that are going straight down, but as far as a higher time frame, I'm not interested in too much here. I'm just kind of more on the observation. For the AUD USD, yesterday we had a trend break and our first 50% retracement short after the trend break was at 65.29. Well, same thing happened here. We traded, that 65.29 resistance. There were sellers on it, and then for whatever reason, I don't know if there was something that came out, but right around that 10:30 time frame, the AUD exploded higher. Basically, all we did was retest the highs, and then we began our sell-off. So we, this leg start here just got retested, the highs of the day, and then you can see actually after we totally spiked through that 50% retracement, we came back and it was respected. It was respected, and we began our sell-off here in the Asian session through the European session. The full 50% retracement short from that high to low is the most valid resistance level, and that is a 65. Okay, that is the most valid resistance level right now. For the euro, we're inside of extension. This is a very clean trade. Once we complete this profit target, it'll be a same anchor new high. We had extensions yesterday, totally blown out. Same thing right around that time frame. I'm still unsure of what that was that came out, but once we complete, it's a same anchor new high. And then for gold, we do have a breakdown here. Below 1682, things get super bearish. We're inside of extensions. We're bearish below 1694 half. If we break 1694 half, there's a possibility of a long series to lead us up into what I would consider the next resistance, which is the halfway back from Thursday's high to low, and that's a 1706. So either we're going to go straight down in extensions through this 1684 support, and if we get through 1684 support, I don't have any support until 1620. So there is potentially a lot of room to the downside. And silver will follow that. These are the draws I have up for silver. We had the full 50% retracement. It was aggressively front run. We are bearish below 1553 in silver, and just a different variation of setups. The GBP USD just traded its next traditional. Same thing, guys. There was huge moves in the currencies yesterday. Our halfway back targets were 20, 125.81. This next measured move from Wednesday's low to high targets through the highs that we've been consolidating in at the 127.02. In my opinion, this is a really good trend. Speed's picking up, momentum's picking up, and we're breaking through this daily resistance level that we've been inside of for a month. Definitely a market to watch. Last but not least, we got the USD CAD with a full 50% retracement short from the 21st of April's high to low. This was aggressively front run. It was aggressively front run on Friday of last week, and it was aggressively front run here again. But that's going to be everything I have for this morning's trade plan. I'm going to share my levels with every one of you who is in the Startup Trading membership and the Discord. If you appreciated this content, please give this video a thumbs up. Feel free to share it with anybody who you think will find it interesting, or on your social media, anybody who's interested in trading. If you'd like to have your questions answered and watching me live stream during the day, make sure to click the link below and join the Startup Trading Discord. Everybody take care, have a wonderful day, and enjoy your weekends. It's the first day of the month, guys. Things could get wild. Later.